Peace, power, and prosperity, family. This is Amir, the Chicago crypto hustler, Bitcoin block bully, coming to you once again. I want to thank any and everybody that's tuning in right now um, for the sovereign-minded aspects to blockchain, banking the Unbanked episode, live right now on YouTube, recording New Money Matrix podcast. I'm your host, the Bitcoin block bully, and this is something that I've been wanting to cover for a while now, and just show some of the advantages of utilizing the blockchain to live in a truly private and sovereign fashioned way of life, to whereas you're not so dependent on big brother or the government or just those around you that may enable you, especially when it comes to the financial and economic level. I believe within this country, within this jurisdiction, let me call it, that we are too dependent on outside sources in order to handle a great number of affairs that we are actually privileged to handle on our own, but because we may not know it or have been raised in the public, meaning with a public education, which they can only tell you how to operate in the public, not knowing that there's a way to operate privately, we miss out on information that is only for the informed family, not for the uninformed family. And the informed will be those that are taught privately how to access private. What's the word I'm looking for? Private, not facilities, but necessities. No, um, it's. Man, I can't. The word eludes me right now, or I can't think of the word that I'm trying to use. But it's a whole way to operate out here that we have been not privy to. And in the world of finances and economics, as far as, especially when you're operating on a commercial level, and you are doing quote unquote commercial transactions, even working or acting in the capacity of a banker. A lot of individuals don't know when you are utilizing Federal Reserve notes, those are actually bank notes. They're actually a financial instrument. And with you utilizing them, even though it may be something as simple as you going to the store and buying a candy bar or whatever, you have thus done a commercial transaction using a bank note. So in essence, you are operating as a banker. Though it may be a public banker, you're not operating as a private banker. Well, I guess depending on how you look at it, but you're doing bank transactions or the transactions of a banker without even knowing it, because you are utilizing and using quote unquote a bank note, which is a financial instrument that is supposed to be used by financial institutions. And you in your person utilizing that bank note, which we got to understand and remember that a person is deemed a company, corporation, estate, trust, partnership, etc. You are doing essentially transactions that are usually looked upon as, even though it's we're doing it simply, like I said, you can buy a candy bar and not think anything of it, but when you really break down the transaction that just transpired, it really blow your mind at the severity or the depths of us utilizing Federal Reserve notes in our everyday commercial transactions, and what capacity that places us in the sense of you're operating in your public when you utilize the Federal Reserve note. Now with the emergence of cryptocurrency and blockchain, it is now allowing individuals to operate in the private, right? In the private capacity, whereas for so long we were operating in the public. So it's even in the playing fields now. It's even the playing field more so, especially on the financial and trading level, to whereas what once was a platform or a playing field only open, much like the NBA. You can't get to the NBA unless you're qualified to play in the NBA. You're not going to allow a high school student to go and shoot ball against Michael Jordan and some of the greats, right? With the emergence of cryptocurrency and the blockchain, much like that NBA game, when you get into the world of finances, especially trading, you being able to trade and utilize. Hold on, family. Give me 1 second. Hold on. Give me 1 second. I did not know. Hold on. Give me 1 second, please. I did not know. I wonder if that can even be heard. I wonder if that can even be heard in the background. Somebody's utilizing a blender within the household. I wanted the house to be quiet while I recorded this episode. I guess they did not get the memo, so it is individuals right now that are okay. I want to wait until that's done so I can continue. Okay, hopefully they're done up there. And I just lost my whole train of thought. But anyways, just getting into the whole thing. Well, like I said, what's going on right now is they've even the playing fields. They're allowing any and everybody to operate in a private capacity in this new money matrix of commerce. So the first is two platforms that I'm going to be bringing to the attention of the family today. One is called Compound. Where is it? Oh, okay. Let me bring it back up. I must have erased it. Here we go. Compound.finance. And the other one is MakerDAO, but the CDP portal, which can easily be found if you go to makerdao.com and you scroll down to the bottom, right? You see you got a couple of options. They got a new Oasis, decreasing the stability fee, stablecoin use, the road to mainnet release, and introducing the new CDP portal for single collateral date. And that's what we're going to be utilizing is the CDP portal, right? Now that's a breakdown, but I'm gonna break it down for you more so. So if you come down here, these are the products they have. They have the day stablecoin, the portal, the governance program, which is utilized by those that hold the Maker coin or the MKR coin, and the platform data. So anyone that was privy to the previous video that I just did, I just finished it up probably 20 minutes ago, about 45. Where I covered Maker as far as I got into a little bit of the platform, but more so I covered the coin. And I guess I did a little bit of both. I guess you could say I did a little bit of both. But I'm going to be really diving into the platform and showing you how it operates, showing you the back office, how it looks on the inside, and how you would utilize it. I've been out most of the day, so I wish I'd have had time to send some money over to my MetaMask wallet so I could really show individuals how to utilize a loan. Which don't worry, I'm gonna come back and do that. I'm gonna come back and I'm gonna show everyone how you do a loan on this platform, and also how you would compound or put an asset into the Compound platform and utilize it. Now, both of these, Compound and the CDP, no, this one can't be found on there. Okay, they got another platform on the Trust Wallet that is made on the MakerDAO protocol. Even though it's not this exact portal, it's one that is closely tied to it called InstaDAO. But they pretty much work in the same way. So let's see. I think the first one we're gonna go over. Let's use Compound. I'll go over Compound first, and then we'll close it up with MakerDAO and the CDP portal. I think this one's going to be more extensive than Compound is. Compound is pretty much just like a bank, meaning you would put your funds into a savings account. We'll use a savings account in instance, where you would put your money in the bank and you would gain interest, be it yearly interest, on your savings account. Now let's see, what is the usual APR? Or would it be APY? APR, I believe. Yeah, that is for a loan. Let me see. I think the APY is what I'm. Is that right? Let me see. Yep, here we go. So the average savings account has a measly 0.06% APY or annual percentage yield or interest, and many of the nation's biggest banks pay rates as low as 0.01. Wow. But there are actually some accounts that pay yields closer to 1%. They're acting like that is actually that's actually like high, I guess, 1%. Let me see. A typical savings account at a big bank only pays 0.01% APY. The best online banks offer perks like no minimum balance, ATM access, and much higher interest rates than the average savings account. What is the average interest rate on a savings account in 2018? It was 0.08% APY. 0.08% APY. if your current savings account interest rate is as low as 0.01%, it might be time to switch banks. Wow. So we see what the usual APY is that the banks are giving you, right? Let's head over. Let's look at Compound real quick. Let me see. Compound is an open source protocol for algorithmic efficient money markets on the Ethereum blockchain. Let's see. Let's read a couple of articles. We've got a couple of them over here. One from Market Watch, another from Compound, which launches an easy way to short cryptocurrencies. And we also have what is Compound. So let's see, what would be the first one we want to run through? How quick? A 5-minute read. Let's run through what is Compound real quick. What is Compound? Compound is a money market protocol on the Ethereum blockchain, allowing individuals, institutions, and applications to frictionlessly earn interest on or borrow cryptographic assets without having to negotiate with a counterparty or peer. Each market has dynamic interest rates which flow in real time as market conditions adjust. Compound is currently accessible through the Compound web interface, which is what I'm utilizing right now. And they do have a getting started guide. Also, let's see what this looks like. How to earn interest and borrow Ethereum assets. Oh, I wonder which one we should read. This one really breaks down how to utilize it, though. Let's see. That is what is, and this is how to use it. We can go through both. It's not a biggie. I'm here. I'm gonna cover this as in depth as possible because I do. I'm gonna say this one more time. I do want individuals to really get this information. I really want people to get this information and understand it. So if it takes me an hour and a half, 2 hours, whatever the case may be, to run through this, I'm going to do it. What's going on, bro? How you doing, Dustin? We got a couple of viewers right now. So let's go ahead. In fact, hold on. Let me do this real quick, family. Let me share this out real quick. Let me share this out. Let me see what. Let me see. What thumbnail do I want to have? There we go. We can use this. So let me pause for a second and let me share this out real quick momentarily. Let me share this out on my Instagram page. Meaning, let me go over real quick. Let me snatch this up. What market am I in? Okay, let me switch over. So real quick, I'm about to share this to IG because I do want as many individuals as possible to be able to actually okay, let me get this. I want people to get this information. I really want people to get this information. So I'm gonna do whatever I can to get individuals. I mean, even though people can easily come watch the replay, I personally would like it if people were here. That way they can ask questions, right now as we're live versus them having to leave a comment, you know what I mean? And anything like that. So I love interacting with the crowd. I love interacting with individuals. This is what I really want to do. So I want people to get this information because I really feel that this information can number one, not what am I trying to say? I think that this right here, not more so for you, even if you don't get it, your children. Think about your children. Think about where the world's going and what the future holds for your children as far as financial and economic. Something that I think a lot of us, especially those coming from a more so urban demographic like myself, I think these are the things that we need to be passing down to our offspring and our reflections. Let me see. Live right now. Tune in and ask anything. Let me see. There we go. Share that. And let me see. Do we got it? Yep. There we go. All right. So let me see. So the first story we're going to be covering is, do I want to do the stories first? Let's get into what it is first. There we go. So let's get into the interest rates. The different interest rates are, let me see, where did they go over first? Okay, so we went into what is Compound. It's a money market protocol on the Ethereum blockchain, which allows individuals, institutions, and applications to frictionlessly earn interest, meaning whatever you place in there, you'll earn interest on, just like a savings account. And there, anyone could do this. Or borrow cryptographic assets without having to negotiate with a counterparty or peer, meaning that you can also borrow funds from this platform as well as put interest assets in there to earn interest on flow. So let's get into the interest rates. Let me see. Do I want to get into this one? Yeah, let's go through that. Then we'll come over here. Interest rates are a function of the liquidity available in each market. When liquidity is plentiful, lots of supply, low borrowing demand, interest rates are low. As liquidity becomes more valuable, which means supply is low and borrowing demand is high, interest rates increase, incentivizing new supply and repayment of borrowing. How is interest calculated? The interest rates you see in the interface and market overview are quoted as annual interest rates. Let's go over here and see exactly what it's talking about. Let's go to begin using Compound. It's probably going to ask me to connect my MetaMask wallet, which for those just getting into the space, it may be a little complicated, but you're going to have a Chrome extension or extension on your laptop that allows you to utilize a Ethereum-based wallet in order to utilize a lot of these platforms that are built on the Ethereum blockchain. Connect. There we go. All right. So, and like I said, I don't have any Ether in my account, which I did, so I could actually show you all how to utilize this. Though, like I said, I'm gonna come back and I'm going to do a run through on how to utilize each platform. We can see right here your rate of APR, which let's see. So I want, like I say, I like individuals to know exactly the words we're using. So an annual percentage rate. The term annual percentage rate of charge, corresponding sometimes to a nominal APR and sometimes to an effective APR, is the interest rate for a whole year rather than just a monthly fee rate as applied on a loan, mortgage loan, credit card, etc. It is a finance charge expressed as an annual rate. So coming back and looking at this, we are looking at the APR rates on each coin. Basic contention token is 0.06, with Day is 2.25. Wow. Augur is 0.01. Wrapped Ether is 0.09, and OX coin or ZRX is 0.06. Let me see. This is the app. Let's look at the markets. Now we're able to see the supply, how much is borrowed, the collateral required, liquidation discount, and the origination fee. You can see on each token exactly how much is in, how much is being borrowed, the borrowed APR as well as the supply APR, which this is if you are the supplier of said asset. This is if you are the borrower of said asset, right? So it goes on to say interest. Now, even though they have annual interest rates, interest accrues each Ethereum block, which is every 15 seconds. Your balance will increase by 1 to 20, whatever that is. I'm not even going to try to break that down, of the quoted interest. In fact, no, let me see. Let me see if we can figure out exactly what this is. Copy. Let's see. Let's see if we nation. Hold on. Yada yada yada. Let me see. What were they saying? How it's calculated? Your balance will increase by 1.5. Or is that a half? Okay, so yeah, your balance will increase by a half of the quoted interest rate. Wow, okay. So every 15 seconds, pay attention to this, family. Every 16 seconds, your balance will increase half of the interested quoted rate. I don't know why all those numbers were throwing me off. I don't know why I didn't just realize that it's a half, even though it's broke down. Let's see. Yeah, it's broke down more so. So I didn't even need to do this. Let's get rid of that. Let's move on with the story. So instead of an annual interest rate, they're actually telling you that interest accrues each Ethereum block, which is every 15 seconds, and your balance will increase a half of the quoted interest rate. When I supply an asset, am I locked into an interest rate? Nope. Every supplier of an asset earns the same interest rate each block, regardless of when they originally supplied the asset. The interest rate floats or adjusts each block as market conditions change. How is interest paid? Interest isn't distributed through Ethereum transactions. Instead, your balances in the protocol increase each block. Why is there a spread between supply and borrowing rates? The compound protocol allows there to be a mismatch between the quantity of supply and the quantity of assets borrowed. By design, there is always an excess of liquidity. The flip side is that the interest paid by borrowers must be spread across a larger pool of suppliers, such that their interest rate is proportionally lower. The market page shows sponsor equity. What is that? Let's see. Okay, there goes the sponsor equity. In each market, 10 to 15% of the interest generated by borrowers is retained by the protocol. The rest is distributed proportionally to suppliers of the asset. Equity grows over time and absorbs losses in the event that an at-risk borrower is not properly liquidated. Using Compound. Are there any costs to using the Compound protocol? Aside from the gas cost of submitting an Ethereum transaction, there are no costs or fees to supply assets to Compound. I'm gonna say that one more time. Other than the gas cost, which is the amount of Ethereum that it costs for you to do transactions on the Ethereum blockchain, right? They're saying the amount that it costs. Hold on. The amount that it costs is zero. There's no fees. You can send money over there, and they're not going to charge you to utilize their platform. Much like MakerDAO, they do not charge you to utilize the platform. There is a 0.025% origination fee to borrow an asset. And as an example, if you borrow one DAI, you'll receive one DAI, and you owe the protocol 1.00025 DAI. In addition, you're responsible for the interest that you accrue. So if you borrow one DAI, you owe them on the payback 0.00, which is one DAI is equivalent to $1. So this would be equivalent to not even half a penny, half of a penny, maybe not even a half a penny, far less than a penny, family. In addition, you're responsible for the interest that you accrue. How much can I borrow? You can borrow any asset as long as you maintain a supply of 1.5% your borrow balance as collateral, or 150% ratio. You can use multiple assets as collateral, for instance. You can supply Ether, Augur, and basic attention token to borrow DAI. Your supply balances earn interest regardless of whether or not you are using them as collateral. How long do I have to use Compound for? You can use the Compound protocol for as short as one block. There are no requirements on how long an asset must be supplied or borrowed for. And because interest accrues every block, you're free to withdraw or repay at any time. So family, not only are there, okay, let me break this down for you real quick. There's no credit check to utilize this. There's no ID used to utilize this. There's no age limit to utilize this, even though in the fine print it may have an age limit, but there's no way for them to honestly check the age group of the individual that's utilizing this platform. There's no pre-requirements other than you having an asset to place in it if you want to earn interest or borrow against it. So, and there's no time limit. There's no time limit on your loan, family. Or, I mean, this isn't the loan aspect. This is you can borrow from this, but on you gaining interest, right? There's no time limit. You can have that money in there gaining interest, or those funds, those cryptocurrencies in there gaining interest for as long as you like. What happens if the value of my collateral declines? Okay, so let's use gold in the face of cryptocurrency. Let's say you we'll use, okay, real simple explanation. Let's say you put $150 worth of gold, right, into a platform at the gold being $100 a bar, right? Let's say after that $150, you pull out $75 or half of the value, right? Gold at $100, your liquidation price, meaning that if gold was to devalue to a certain price, would probably be, let me see, if gold is at $100, probably be somewhere around maybe $60. if I'm not mistaken. Meaning you would need gold to devalue down to the price of $60 before it would liquidate your price or your position. So let me see how they break it down. If your supply balance is less than 150 times your borrow balance, your collateral declines in value, or the borrowed asset increases in value. The community can repay a portion of your borrowed balance to bring you back to a 1.5. Wow, I didn't know that. Okay, the community can repay a portion of your borrowed balance to bring you back to a 1.5 times collateral ratio. The liquidating user receives a proportionate amount of your collateral at a 5% discount as a reward. Wow, interesting. All this on its own, family. No human interaction needed. So how much should I borrow? Well, that's a my the compounds to a minimum collateral ratio of 1.60 one times for borrowing and with carefully monitor any position. Can I lick? Offers a risk API that developers can use to monitor at-risk addresses. One development community has recently begun work on liquidation dashboard. Let's see. I'm with a liquidation. What is it? Is this allow us to buy those loans or pay the loans? Because I'm definitely into that. If they're that, I definitely want to know. Compound is up and running. Okay, so this. Wow. Okay. I'm say risky. You can expect it at your own risk. This is interesting. Compound liquidator. I'm definitely gonna have to come back and do more research on that and how they're utilizing that. That's interesting. How can I view my balance without trusting the interface? Sometimes the balance appears as zero, typically due to an issue with MetaMask or Ethereum. Relax, this is common. To view your balance on the Ethereum blockchain, view the Etherscan contract and scroll to 14, yada, 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 and enter your address and the token address. Click query in your balance with 18 decimals and will be shown. Governance. Who controls the Compound protocol? Compound Labs Inc., the developer of the protocol, currently holds the Ethereum address, which is the protocol administrator. The admin has the right to support additional assets, suspend assets, upgrade the price feed oracle, or upgrade the interest rates and withdraw sponsor equity. Will the protocol be upgraded? The Compound protocol is a first of its kind experiment in economics and decentralized finance. There was a lot that we couldn't anticipate before launching the protocol for the first time, and a lot that we've learned since. Soon, we're going to begin working on version 2 of the Compound protocol. If you have any improvements you'd like to see, you can let us know via Discord. Will governance ever become decentralized? The plan is for the protocol to become fully decentralized. Over time, the protocol admin will be replaced with a DAO, or decentralized autonomous organization, governed entirely by the community, much like the MakerDAO protocol is. Where does the price oracle source prices from? The price of day is sourced from the Maker ETH versus USD price feed. The prices of BAT, ZRX, and REP are the median of prices from Bittrex, Poloniex, and Binance. Security. Where are the assets stored? The Compound protocol records balances in the same way that an ERC20 token records token holder balances. Your private key, public address controls the ownership of the balances in the protocol. All contract code and balances are publicly verified. Has Compound been audited? Prior to deploying the protocol to the Ethereum mainnet, the protocol was audited by Trail of Bits, which also audited MakerDAO and Satoria, excuse me. How safe is the Compound protocol? Compound was deployed to, when they got the address of the deployer, on September 27, 2018, and currently holds $10 million of assets. Wow. And when was this released? This story, how old is this? This is from October, I think, if I'm not mistaken. Yep. No, December 2018. So we're a couple months back. Let's see. Where the assets stored. Okay, okay, we looked at that. How safe? Okay, so they got 10 million worth of assets. The first rule of crypto always applies. Only interact with the protocol with assets you are comfortable losing. And I can't stress that enough, family. Only trade, only enter, only use an amount of assets that you are capable of losing. Anything can happen in this space. Is very new. I'm never going to tell you that everything is 100%. I mean, nothing in life is 100%. You can put your money in the bank. And look what's going on right now with Navy, Federal, Wells Fargo. People have had their funds locked up. So before people get too bad mouthing crypto and saying, "Oh, look, it's not again," Nothing's a guarantee. The very money you put into a bank is not guaranteed to come back to you. Do not let anybody fool you and think that it is. Let me see. Help I can't access. Okay. The first rule of crypto: only interact with the protocol with assets you are comfortable losing. Ethereum and all other software built on top, including Compound, is extremely experimental technology, and the risks are not completely understood yet. If you can't access it, the Compound protocol lives on the blockchain, on the Ethereum blockchain, and is always on. In the event that MetaMask or the Compound interface are malfunctioning, you can always access the Compound protocol manually. Let's see how will we do that. They got a link here. Let's see what it's going to bring us to. Operating the Compound protocol manually. Wow, they got something for every single thing that you can do. Let's see. I'll do this at a later date, though. I'm not going to go over how to access it manually right now when we have individuals that don't even know how to utilize the MetaMask. So this right here will be covered at a later date. Definitely good to know that it's here, though. Definitely good to know that the Compound liquidator's here. I like that. I definitely love that. Being able to buy someone else's debt or their loan. That's what a collateralized debt obligation is. That's exactly what a CDO is, which is, I believe, where they got the idea for a CDP. So that was our first covering of Compound, right? Now let's look at how to earn interest and borrow Ethereum assets. Let me see. The account overview summarizes the health of your account, the value of assets supplied, borrowed, and your borrowing capacity. In order to use the Compound protocol, you must first enable each asset you plan to use. Once enabled, you can navigate the assets page. You must either supply or borrow any asset, but not both. You can't do both. So as you can see right here, right? They have, let me see. They got a supply of $630. Their borrow balance is $50, and they're available to borrow $410. Wow. They're available right now. They only borrow $50 against that, right? They're available to borrow up to $410. That's $630 they have locked up in here in wrapped teeth. That's interesting, very interesting. And they borrow $50 worth of ZRX. And I'm liking this. I'm loving this. So basically, you can block in any amount of assets that you're holding in Ethereum, or I believe one of the other tokens available, and borrow another token against that asset. Y'all getting this? Let me see. Do we got any questions so far? The best thing is to get knowledge up and get busy with the tools that you are used with collateral and borrowing. Definitely. Brother Marcus, how we doing? How we doing? So moving right along. Supply assets and begin earning interest instantly. Let's see. Let's go back over here. Let's take a look at the app. So this is where your supply balance would be. Had you placed anything in here? This would be your, and like I said, I'm gonna come back and I'm gonna do a full review on how to utilize these and actually use them. This will be your borrow balance, how much you borrowed, and this is how much you will be able to borrow against your assets. These are the tokens that we now have available. You got basic attention token, Day, Augur, Wrapped ETH, and ZRX. So this would be your rate. This would be the balance that you have, right? Go over to markets. In fact, let's check out they frequently asked questions. Let me see. I wonder what they got over here. That's actually the one we just read. Okay, so that's crazy. Their frequently asked questions bring you right to the Medium page we just got done reading. So okay, that's a good thing. We already know what that is. So let's see. Let's figure out. Let's finish up, and then we'll come over here and really go through it. Supply assets and begin earning interest instantly. Enter the quantity of the asset you'd like to supply, and then submit transactions. Assets are supplied directly from your Ethereum account into Compound. That means your MetaMask or your Trust wallet. Once supplied, immediately begin earning the prevailing interest rate. Remember what it said. You get half of whatever this rate is. Hold on, let me get back over here. You get half of, if I'm reading it correct, you get half of whatever this rate is every block, every 15 seconds. You'll gain half of whatever the rate is. If I'm reading it correctly, what we went over earlier. Let me see. Where would I just leave off at? Ethereum account. Okay, interest occurs directly into your supply balance. You won't see Ethereum transactions or distributions, but your balance and the interest earned since your last transaction will slowly increase over time. You can withdraw your balance at any time back to your Ethereum account. Also, this isn't like BitConnect or one of those other lending platforms where your money is locked in for a certain amount of time. There is no lock-in time with these platforms that I'm bringing to you all's attention. Note that for Ether, you need to first wrap your Ether to be wrapped Ether, or WETH, the ERC20 standard, before you can supply to decentralized finance protocols like Compound. WETH can be unwrapped back to Ether at any time. But much like wrapped Bitcoin, which was the ERC20 token created so Bitcoin could be used on the ERC20 platform, I guess they made a wrapped version, which I don't understand, with Ethereum already being able to operate on the ERC20 platform, or on the Ethereum blockchain. Wrap, then supply Ether. Okay. Easily borrow assets for liquidity, trading, or use. In order to open a borrowing position, you must have supplied assets with Compound with the value of at least 150% of the borrowing position you wish to open. For example, if you supplied $150 of rep, this supports borrowing up to $100 to any asset on the Compound. Now, I'm not a financial advisor in any way, shape, or form. I can't give you financial advice, but I myself would not place in $150 worth and instantly pull off $100. The liquidation price or your ratio to get liquidated is going to be that margin is going to be very, very, very small. Whereas if the price moves against you only a little bit, it could quickly liquidate your position. So I like the half and half protocol that I've been using. Whereas whatever I place in there, I will pull out half of that. So if I place 1,000, I pull off 500. I place 100, I'm only going to pull off 50 of that. Okay. And when I do the example later on, maybe not tonight, I might do it tonight, but when I do the example later on, you'll be able to see more so what I mean. So you will enter the quantity of the asset you'd like to borrow and then submit the transaction. Borrowed assets are sent to your Ethereum account. From there, you can send them anywhere you like. Remember, family, you do not have to utilize so the money you borrow off of this and MakerDAO, right? You don't have to utilize it on this platform. You can send it out into the world and utilize it for whatever you want. You want to turn it back into fiat and go shopping with it? You're able to do that. You pay back your loan, you get back the initial capital that you placed in there. Remember, your initial capital, that block of gold goes absolutely nowhere. Once again, that block of gold goes absolutely nowhere. You hold on to that block of gold until you're able to come pay it off. Now, in the event that you're not able to pay off your loan, you'll be liquidated. I mean, if the price goes down, like I said, there's no time limit. So I guess you could take 2 or 3 years to pay it off as long as the price doesn't go against you. But if it does, your position will be liquidated and you'll be left with whatever is left over after whatever penalties you may have to take care of. Note, there is an origination fee of 0.025% or 2.5 basis points for the opening of a borrowing position. For example, if a user borrows 1 Ethereum, the actual borrow position will be 1. Okay, let's do the math. Let's see. Let's do the math real quick. Let's do 1 ETH to USD. In fact, yeah, that'd be right. To USD. Let's see what that is. Right now, that'd be $146.59. Now let's do 1.000. What was that? Well, I want to show you exactly what the type of interest that you're paying on this. 3 zeros, 25. So that's 1, 2, 3, 25. Let's see what that is. We went from 59 cents to 63 cents. That was what, 4 cents? If I'm not mistaken. Let's see. Hold on. Let's do that one time. Yeah, so hold on. There we go. So $146.59. If you borrow, right? Let's go back and look at that. For example, if a user borrows 1 Ethereum, the actual borrowing position will be 1.025. This very small origination fee prevents scam-like misuse of the protocol. I like that. I really, really like that. So yeah, from 59 cents up to 63 cents, nothing. That's crumbs, family. Crumbs. Your account overview can be used to monitor the value of your supply and borrow positions. If the value of your supply balance declines or the value of your borrow balance increases such that you no longer have 1.5 collateral, your account will be partially liquidated to return you to a 1.5 ratio. Wow. Example borrowing use cases. Alice wants, okay, now they're about to go into exactly how to utilize this. Let's say Alice wants increased long exposure to ZRX, meaning that she wants to go long on ZRX, right? That's what she wants. She wants increased long exposure to ZRX. So she supplies 10,000 ZRX to Compound and uses it as collateral to borrow 30 Ethereum. Alice unwraps the ETH and sends Ether to her favorite exchange to purchase 6,000 more ZRX, right? Remember, she already got 10,000. Keep the game now, family. Keep the game. She already has 10,000. I'm long on Ethereum, meaning I'm betting on the price of Ethereum to go up. What do? I hold that 10,000 over here in this loan, right? I get a loan out on my initial capital or collateral, and I'm able to purchase 6,000 more. So now I don't have just 10,000 ZRX. I now have 16,000 ZRX, right? Which is what it says. Alice now has long exposure to 16,000 ZRX and owes Compound 30 ETH. She is long ZRX versus Ethereum. If ZRX versus Ethereum increases in value, Alice will be able to repurchase the 30 ETH she owes Compound for less than 6,000 ZRX. She can then repay her debt and keep the excess ZRX as profit. Wow. Now, let's say Bob wants short exposure to ZRX. He supplies 100 ETH to Compound and uses it as collateral to borrow 12,000 ZRX. Bob sends the ZRX to his favorite exchange and sells it for 60 ETH. Bob now has a long position exposure to 160 Ethereum and owes Compound 12,000 ZRX. If he is short ZRX versus Ethereum. So if the ZRX Ethereum decreases in value, Bob will be able to purchase the 12,000 ZRX he owes Compound for less than 60 Ethereum. He can then repay his debt and keep the excess ETH as profit. Man, they just gave you a very, very good example of how long and short using this platform. Man. View summary metrics for each asset market. You can view Compound.finance markets. Let's go ahead and look at that now. Which is what we're already looking at. Okay, definitely. So I guess we're about to run over this. To see the total liquidity and current interest rates for each market the Compound supports. Okay. Let's go over there. That's the end of that one. Now we're going to get into the meat and potatoes of Compound. We do got a couple of stories. I think I'll cover these stories later on. I'll do these separately from what we're going over right now. Real quick, let me see if I got any questions, any comments from the family. Let me see if I got any questions or any comments from the family real quick. Let's see. Man, I'm already on this site. I love BAT. It's based out of San Francisco, where I'm from, so I believe in the technology. Thank you, King, for putting it. No doubt. So almost a pump and dump. How many times Compound? How many times Compound? What? How many times Compound do they offer? I'm not understanding the question, Marcus. No, it's nothing like a pump and dump. Nothing like a. Don't even. Nope. Incorrect. This is nothing like a pump and dump. But reword your question. Is that compound interest or compound on the value? Compound interest or compound on the value? Okay. I think I get what you're saying. That's compound on the Wait, now, reword your question, brother Marcus. Reword your question. I want to make sure I got it right. So what we're looking at right now, we got basic contention token, we got Day, we got Augur, and we got Wrapped Ether and OX. So market liquidity right now is, let me see what we got, 596,877 BAT. Sponsor equity is 287. Is that 287? Yeah, 287, I guess. Okay, so the total supply, right? Total supply right now. Okay, I got that. I think I got it. Total supply right now is 604,048 BAT. The total borrowed against that 604,000 right now is only 7,459 basically. Wow. The supply APR is 0.06%. So remember, if you're supplying BAT, right? If I got this correct, right? If you're supplying BAT, you will gain half of this 0.06% every block, every Ethereum block. If I got that right. Now your borrow APR, right? What you have to pay back if you are borrowing BAT is 5.56%. 5.56%. So not too high in my opinion. When we look at Day, They got a total supply of 7,785,799, and they got a total borrow of only 2,388,205. Now their supply of APR, if you supply day, you'll get half of 2.25% every block. Man, that's beautiful. Family, think about how the banks work and what they're giving you, and then think about how this bank works and what it's giving you. Hold on, family, give me 1 second. Give me 1 second. Hello? Hello? Okay. I had a call. I guess they hung up. Let me let them know that I am live right now. Let me let them know that I am live. Give me 1 second, family. Let me let them know that I am live. So they can tune in fact, also. There we go. Now, looking at day, like I said, we got a total supply of 7.5 million, total borrow 2.3 million, and the APRs is as far as if you're the supplier, if you're the banker, you're the creditor, not the debtor, the creditor. The debtor has to pay 8.62%. The creditor gets paid 2.25% APR, which is yearly, but you also get half of 2.25%, if I've read that correctly, each block. Let me see. Augur got 849,709 tokens in all, and they got a total of 1,773 tokens out. Their APY is only 0.01%, and their borrow is only 5.09. Wrapped Ether or Ethereum is right now, they got a total supply of 29,611. Total borrow is 499. Their supply APR is 0.09%, and their borrow APR is 5.70%. And then getting into OX, ZRX, a total supply is 2,254, and they got a total borrow of, no, excuse me, that's correct, incorrect. 2,254,000, right? 556 coins. And they got a total borrow of 25,509. Supply APR is 0.06%, and a bar APR is 5.51%. So basically, family, what you would do here for anyone, let's use a real case scenario. Let's say you want to save your money in cryptocurrency or in your own bank versus utilizing the banks that we have now. In order, number one, in order to keep yourself from the volatility of the market, I myself would suggest utilizing the day. If I wanted to hold an asset for long term, and I don't want that price of the asset to be subject to volatility, meaning I don't want it to go up, I don't want it to go down, so I'm not going to save my money in Ethereum or Bitcoin or one of those other tokens. I'll save it in a stable coin. And in this instance, I'll save it in day. So I will put, whatever I got in my savings account, 1,000, 5,000, 100,000, whatever the case may be. I would transfer that and convert it into day. I would put day either on my Trust wallet or on MetaMask, right? And then I would connect this platform to said wallet. And then I would loan or place, right? I would put my supply balance, which the supply balance would be here, and I would be gaining interest off of that loan. Off of me allowing others to use my balance as a loan. Now, I'm also able to come take a percentage out of that and borrow it against myself. So, do we got any questions before we move on to the next platform? This is Compound. Once again, this is the Compound platform. Anybody can utilize Compound. You can go to Compound.finance. Let's run through their page real quick. Stay fully liquid. Assets are supplied to the protocol, which maintain excess liquidity, not to another user. You can withdraw your tokens at any time, even 3 a.m. Avoid credit risk. Wow, this is key. Borrowers are over collateralized, and every aspect of the Compound protocol is transparent in real time, the way finance should be. And when they say borrowers are over collateralized, meaning you have way more collateral than you have people borrowing, which is very, very good. And you can't say the same thing for the United States. Before we move on, let's go look at the ratio to debt now. And now this right here should make so much more sense. This is the United States debt clock. This shows us how much debt we are currently in. So you see the green, see the red. This is the United States national debt right here. This is how much money they have coming in. This is the U.S. federal tax revenue. This is how much bread they have coming in. This is revenue per citizen, revenue per taxpayer, income tax revenue, payroll tax revenue, corporate tax revenue, per worker, per taxpayer, U.S. federal revenue to GDP ratio, total state revenue, total local revenue, revenue per citizen, revenue per taxpayer, and so on and so on and so on. Now, this is the debt right now. This is the amount of debt that we have, right? So look at the amount of debt we have versus the amount of liquid funds that we have coming in there. I mean, we're way off, family, way off, way off. This right here should make so much more sense. I mean, it makes so much more sense to me now, being able to utilize and understand these cryptocurrency platforms and how they work with debt and collateralization, and then being able to come over here and look at the U.S. debt clock. Now we can also look at world debts, the U.S. being top, then China, Japan, Germany, UK, India. You know who I'm not seeing? Ah, there they go. All the way down here is Russia, Saudi Arabia. I was looking for Russia. That's what I was looking for, Russia. Let's go look at gold precious. I'm getting sidetracked here now. Gold precious metals. Okay. Interesting. Interesting. I haven't had time to actually go through this whole platform and look at everything. I usually just go look at the United States debt, but this gives you more so of an outlook when we look at the markets, right? Look at the total supply, look at the total borrowed. Once again, hold on. Look at the total supply. If I'm not mistaken, look at the total borrowed. Way off. We're not over collateralized when we look at the United States as a corp. So let me come over here now, see if we got any questions, any comments from the family. Is that okay? Well, the WETH is cool. Which platform will you be utilizing, or are you going to compare and contrast? I mean, I'm already using one platform, which I'm going to be doing a review on or a tutorial on at a later date. I've used Compound already just to test it out. I placed, I think, $20 in there just to see how it worked. I'm going to be utilizing Compound. Make no mistake about it, family. I'm going to be utilizing this Compound platform. I'm totally for being sovereign-minded in my movements and being able to operate in a private capacity. So I'm going to be utilizing as much of the crypto space as I'm awarded to utilize. You know what I mean? What platform would you consider Compound? Would you consider Compound and InstaDApp? Two totally different things, though. Two totally different things. On InstaDApp, I'm only able to loan and get interest off of myself. I'm not allowing other individuals to loan from me. You see what I'm saying? With this one right here, you're placing it in there and you're gaining a total APR as well as any appreciation with the coin. You're not getting that on InstaDApp. On InstaDApp, it is only made for you to loan money to yourself. So this is a totally different. Even though it's similar, it's a different platform. They're two totally different platforms. You know what I mean? So they have two totally different functions, along with some of the same functions. Now, let's move right along and go over into Maker. Right? This is the Maker website. This is makerdao.com. Maker, MAKERDAO.com. I just finished looking through this one. Let's see. We got the new Oasis, right? Let me see. With multi-collateral down our horizon, it's time to take a look at another essential part of the day ecosystem, Oasis. One of the first places for people to buy and trade day, Oasis played a huge part in the success of the project to date. But now with day trading on a number of exchanges and decentralized exchanges around the world, most recently Coinbase, there is an opportunity to reimagine Oasis to become a powerful trading solution, especially in the world of multi-collateral day. And what they mean by multi-collateral day, right, is meaning right now you're only able to collateralize your Ethereum. But in the future, and this was released November. Okay, so this should be coming up. I think this will be happening in first quarter, which we are in first quarter right now. Interesting. So what they're basically saying is that you'll be able to collateralize maybe Bitcoin, maybe Litecoin, you know, a number of other assets as well. Let me see. Oasis was the first decentralized marketplace on Ethereum and one of the only decentralized exchanges that operate completely on chain. we're going to back to our roots to build something totally innovative and new, just like we did with Oasis Decentralized Exchanges and Oasis Direct. Okay, that's one. We'll come back and do a whole, like I said, a whole review of that. Right now, the one that I want to pretty much focus on is introducing new CDB portal for single collateral day. So what is the CDB portal? Well, let's go straight to it. Welcome to the Collateralized Debt Position Portal. This is the place to generate day. Use this DApp from the maker team to manage deposit of collateral and generate generation of day. Let's see what we got here. Introducing a new day portal. Just a quick read. Okay, yeah, we may be able to use this. We may be able to utilize this. Let's see. Introducing a new CPD portal for single collateral day. Now, we're like I said, we've transitioned from the Compound platform, right? Which allows you to place a certain amount of funds that you want to hold and allow other individuals, for you putting it in here, you'll be gaining an APR or interest. Now, you're also able to borrow against the funds that you have sitting in here. Man, this is life-changing, family. I hope we picking this. Right now, you're able to utilize MetaMask, Ledger Nano S, as well as Trezor. The number one concept, what is a collateralized debt position? CDP enables the generation of day stablecoins against collateral, currently Ethereum, that you lock up in a CDP until you pay back the day generated. What are the benefits of opening a CDP? Almost like asking an individual, what's the benefit of taking a loan? You can get liquidity by generating day stablecoins without giving up ownership of your collateral, as long as you can make sure that the CDP holds enough collateral to cover the value of the day stablecoins. When using ETH as collateral, the value of the locked up collateral must always be more than 150% of the amount of day stablecoins that you generate. So remember, family, you want to pay attention. You want to pay attention, right, to the amount of that you have taken out. Okay. Let me see here. Okay, so yeah, I got that. Got my buy set over here. Let me see, do I got it set? I also have. I was checking my exchange, Dragon Exchange, apologize, but I do have some positions opened over here, which I'm utilizing the loan that I took out of my own. You can get by generating that. Oh, okay, we read that. How much Ethereum you want to lock up in the CDP? You generate day stable coins against ETH, you locked up, and then spend them as you wish. You pay back the day stable, no longer the liquidity fee, and then you can withdraw the collateral that you locked up. Is there a risk in creating a CDP? Monitor that the value of the locked up ETH is always more than 150% of the day stablecoin that you generated. Your CDP will not be liquidated. If the value of the collateral is close to 100%, you collateral or the debt, the value of the collateral, then you say it. This means that the collateral is being sold by the system in order to cover the value you generate. Any over collateral is so you can withdraw. Whatever you take out, they only 15 penalty. And this, let me see. What do I need to get started? Connect to one of the 4 wallets below to automatically connect to the CDP portal. For more information on these wallets, use the links below. If you are an advanced user, you can also use the MakerDAO command line interface to create CDPs. I have no idea what that is. That must be over my understanding. Now, does it cost anything? Once again, there's a stability fee on the DAO stablecoins of 0.5% a year. I'm gonna say this again, family. I'm gonna say this one more time. There is a stability fee on the DAO stablecoins of only 0.5% a year. Think about the percentage that you pay on your credit cards, banking, whatever the case may be. You pay the fee with MKR when you pay back the day. If your CDP becomes liquidated, then there is a 13%. Okay, I thought it was 15%. They may have changed that. There's a 13% liquidation penalty that will be subtracted when the locked collateral. In fact, you know what? No, I think they did just vote on the penalty. Now, I believe they may have lowered it because it was 15%. Remember, those that hold the Maker coin are able to govern the platform and vote on certain rules and regulations of the platform itself. So let's go right in. Let me see what we have here. Introducing the new CDP. Let's see, connect. We'll be connecting MetaMask. And I don't know if you guys can see the MetaMask as it pops up, but I'm connecting it right now, waiting for approval, loading. Okay, there we go. You have no CPDs open at this time. Let's go to open. So let me run through this real quick. Let me run through what they have written, and I'm gonna come right back over here and show y'all exactly how this works. Because I can actually do a quick example without having to put anything in here. So let's real quick. Introducing the new CPD portal for a single collateral day. CPD is a new DApp. Okay, one of the biggest changes to the original day. Yada yada yada. Within a single trans, this means no approving token allowances before you need a law. Okay, so they changed. You used to have to approve the token. You don't have to do that anymore. The second major change is the UI, user interface. At MakerDAO, in addition to writing secure smart contracts, we aim to create intuitive interfaces that make it easy to interact with the day credit system. Okay, opening a CPD is now as easy as two-step process. Simply enter how much ETH you wish to collateralize and how much day you want to generate. Let's see. Let's say we want to collateralize 10 Ethereum, right? That will allow you. Let's do some math. Let's crunch some numbers real quick. Let's crunch some numbers. Go to converter, cryptocurrency converter. We're gonna crunch some numbers now, family. Let's get Ethereum pulled up over here. Let's crunch some numbers. Let's say let's use 5. Say we want to put 5 Ethereum in here, which is going to generate 4 Ethereum. Remember, they have to mark it down a tad bit in order to keep the platform and protocol simple. So 5 Ethereum, which is the equivalent of right now $741 USD, right? 741. That will allow us to withdraw. Wow, 485 DAI. Okay, 485. Yeah, they did lower the liquidity price. This used to be 15%. I like that. Stability fee. So right now the stability fee is 1% a year. Wow. Okay, so that's changed. So the stability fee is 1% yearly, family. Keep that in mind. It is 1% yearly. So with 5 Ethereum, and remember what I told y'all. The closer you are to the top, or the most you can withdraw, the faster your liquidation could happen. So I would not be trying to withdraw that much. We got 741 in there. We'll say that's 750. What would that be? 35 and 7. So that would be what? 37.50, if I'm not mistaken. So would that be $375? Yeah, roughly about $375, correct? So instead of you pulling 485, you would pull out 375, which would lower your collateral, your liquidation price. Right here would be a liquidation price. If we had any Ethereum, it would be telling us at what price we would be liquidated. Which I'm kind of salty. I don't have any order right now because it would be so much better for us to see this in real time. But like I said, I'm gonna come back and I'm gonna do a full one where I'm actually showing you how to utilize it. Now, if you're generating DAI, which is within a particularly unsafe 200% range, you will see warnings before being able to continue. Likewise, if the liquidation range is 150, you will not be able to open a CDP. Second step is to confirm your CDP and accept the terms of service before your CDP is open. And I advise any and everybody that is utilizing these platforms to please. Damn, hold on, what happened? Okay, so it seems that hold on, family. I was not. What time is it? 10:19. I wonder when it cut off on us. So I started this at what? 9. Okay, so it might have just cut off. It might have just cut off. Let me see something. Let me see exactly when my podcast cut off, family. That way I'll know exactly where to come back in at. Let me see. In fact, let me go ahead and save this. I didn't even know it had cut off, but it did just cut off probably about 3-4 minutes ago. Banking the unbanked. There we go. Add. Okay. So I'm adding that. Um, start waiting podcast. I left questions or comments. Any questions or comments? So much intel. I say goes down, and you can become a lender. What just happened? Oh, okay. There we go. No. Damn, did the video stop also? Damn, okay. See. Are we stopped? If y'all can still hear me, let me know. Did the video stop? Okay, there we go. There we go. Okay, not really just soaking it up like a sponge. Sound way to grow your wealth. Definitely. Okay, so no questions as of right now. No questions as of right now. Okay, that's no problem. No problem whatsoever. Let me see. I'm waiting for exactly where I left podcast, family, because I do want to pick up exactly where I left off. I don't want to too much time. Also, let me. I can hear you. What's crazy? I have an issue with one thing. Yeah, go ahead. What do you have an issue with, my brother? Let me know what the issue is, and this figure if how to approach this issue. Go ahead, ask your question. Now I do know. I think there's a lag. With Facebook, there's a lag of about 15 seconds. I'm not sure there's a lag on with they on YouTube. So any other platform. How do you get the fun platform? I got very I got you. Okay, I got you right now. This is not a problem at all. Easy fix. CryptoCon. So what we're looking at right now is another one of my cryptocurrency channels. Cryptonomic Council. Only got 185 subscribers over here with 1 videos, but this platform is important. Over here, basis at this is where you get your beginning at. I mean, I have a beginning on the Chicago Crypto Hustler page, but it's over like 200 videos over there, so it takes forever to go to find it. So at the beginning of this one, you can see we have what is Bitcoin, how to sign up for Coinbase, how to sign up for Binance and send funds. Binance tutorial. How do you option on the Binance market or platform, exchange market? What you're looking for, brother. This right here is what you're looking for. But like I said, and not fund these the funds on an Ethereum compatible wallet that you will connect to these platforms, because these platforms are being run. It wouldn't be you sending funds from Binance over here. It would be you sending funds from Binance. You need to, yeah, only trading on Meta now. Okay, I got the funds on there. You use if you Dash Wallet or MetaMask. And so what you would do is send funds from Binance or MetaTrader, whatever the case may be, and you would send those over to your MetaMask or your Trust Wallet. And then once it's on those, you would open up one of these platforms and it would connect automatically, right? It would connect automatically to your to the platform or to your wallet. Okay, it's saying I sound choppy. Family, am I choppy right now? I hope this isn't messing up on me. Family, please let me know if I'm a little bit choppy before I continue. Please let me know if I'm a little bit choppy before I continue. Let me know if I'm choppy before I continue. Okay, it's clear now? You sure? 100%? I want to make sure that I'm clear, right? I want to make sure that I'm clear before I continue. The funds are on Binance, but when I try to purchase coins, it is insufficient funds. I mean, I wouldn't be able to help you just from you articulating it alone. There's so many variables to utilize in this technology that, okay, you're trying to purchase coins, but I don't know what market you're trying to purchase them in. I don't know what funds you sent over there. I don't know in what currency you're holding. You know, it's a lot of variables. If you want, you can contact me at Cryptonomic Console, CRYPTONOMICCONSUL at gmail.com. Once again, in fact, I can put it in here. Don't worry about it. I got you. Hello, this is Jaslyn. It's clear now. Peace, Queen. How we doing? How we doing? Welcome, welcome. How long you been here for, Queen? You been here for a minute? How do I get the funds to, I guess, the Binance wallet? I mean, you got to, I don't know where your funds are. I don't, you got to send them from wherever you're at, wherever your funds are, you got to send them to Binance. You know what I mean? Wherever your funds are, you have to send them to Binance. Like I said, it's a lot of questions can't easily be answered because there's so many variables within this tech that have to be considered and looked at before anyone can easily answer a question. Also, family, let me know if my screen is clear. I'm looking at it on one of my phones, and it's looking like the screen is not too clear. But please let me know if it's clear for everyone to see. There's my email for anyone interested that needs to reach out. I do have a book available for those just starting off in the world of cryptocurrency. The book is available by way of donation. After the donation is made, you do receive the book along with a free 30-minute consultation with myself. And you can ask anything. I usually call it a discovery consultation, but you can ask anything. Just got on like 15 minutes ago. All is well. Screen is clear. Okay, bet. Okay. Let's see. What were we going over? Okay, here we go. Banking the unbanked. Now, how do I add recording the episode? Here we go. This will be added. No, I don't want to add to that episode. I want to add to, let me see. Number one, let me see something real quick, family. Let me see if I can listen and hear exactly where I left off at on this episode. And it seems like I'm going to have to, let me see. Okay, so yeah, it seems like I'm gonna have to publish this one in order to let me see. I might have to publish this in order to continue recording on it. Wait, nah, no, I'm not. Hold on. Rename segment. Let me see. Okay, I know how to do it. But see, that's another thing though. Okay, so yeah, family, give me 1 second. Let me publish this real quick. Let me publish this one right here, and also, I got to know exactly where I left off at in order for me to continue. I have to know where I left off at in order for me to continue. So let me publish this real quick. Okay, there we go. Publish. Let me see. Let me see if I can listen to it real quick. Listen. Let me see. There we go. Let me see. Let me see. Let me see. Is there a risk involved? Let me see. Let me see. Because I hear where I'm going. Let me see. Is there interest paid? How much can I borrow? Okay, 15% penalty. Okay. So I just got cut off. Okay, so where was I just reading this from? Okay, so I'm talking about a percentage I pay for the credit cards. Let me see. I know exactly where I left off at. Perfect. How does it work? 13%. Yep. Okay, so you can use one of these four down here. Oh, oh, okay, yeah. So okay, yep. I had just connected the MetaMask. I had just connected the MetaMask, so that's where I left off at. Okay, perfect, 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 perfect. We're gonna start off with introducing the CDP portal. What have we done? Yada yada yada. Opening a new CPD. Okay, so yeah, we're gonna start back with opening a new CPD. Okay, let's see. Now, if I want to, let's see. All right, here we go. Add segments. Hold on, hold on. Segment. Perfect. Here we go. All right, so now we have the MetaMask. Um, excuse me. We do have the MetaMask wallet connected to MakerDAO now, and we're looking at it, and it is a 13% liquidation penalty, not 15% as I erroneously stated previously. Let me see. I learned from the bully. Oh, okay. I ain't even know y'all over here talking. No problem. Thank you, thank you, thank you. I learned from the bully. Not clear. Apologize to get you all off track. Please continue with the knowledge. It's readable, but it's a little blurry. I'm following you on Instagram and Lil Man. I want my daughter game up just like that. Oh, okay. You following my little dude? That's what's up. That's what's up. Um. Okay. All right. So let's continue. Let's continue. Let's continue. Is it blurry on anybody else's page? I do want to know if it's blurry on anybody else's page. Let me see. Where do we leave off at? Okay. Now, going right into the CPD. Opening a CPD is now as easy as two-step process. Simply enter how much ETH you wish to collateralize and how much day you want to generate. Let's go over here and do an example. So remember, we did an example of 5 ETH, which gives us a total of $741 and allows us to then withdraw a total of $485. Remember, we put 741 in there at the current price of Ethereum. Right now, we're able to pull out $485 out of that $741. Like I say, I would do half. I would do half of that, so maybe 375, 350, just to be safe on the safe side. Let me see what we got going on. Let me see how they finishing. The user interface will give you helpful details detailing the liquidation price. Okay, so you enter how much Ethereum you wish to collateralize, or how much ETH you want to put in there, how much day you want to generate, And the user face will give you helpful details detailing the liquidation price and collateralization ratio. If you're generating day, which is within a particularly unsafe 200% range, you will see warnings before you're able to continue. And likewise, if the liquidation range is negative or greater than, less than 150, you will not be able to open a CDP. The second step is to confirm your CDP and accept the terms of service. I really advise any and everybody to read the terms of service anytime you come across it. Well, you know exactly what type of contract you're signing. And you want to read that before your CDP is open. That way you know exactly what you're getting yourself into. Now, once you've opened the CDP, your dashboard will display the critical details and all the actions you can take in order to manage your CDP, including deposit, withdrawal, payback, generate day, and close your CDP. You will also be able to see the history of your CDP and all the actions you have taken. And I'm going to show y'all something too. I'm going to show y'all on MakerScan how we can actually look at individuals that have open CDPs right now and show y'all the amounts of money that they playing with. I'm saying it's people over there playing with. I don't even know if they people. Well, people in the legal sense, yeah, because people is a corporation, but or person rather. Man, it's people over there playing with huge amounts of capital, family. Migrating existing CDPs. If you have an existing CDP, you will need to migrate it into a new proxy contract in order to view and interact with it. Okay, so they're talking about for those that were using the older version. Finally, why launch this for single collateral day? Creating great products requires constant user feedback and design iteration. We are launching the CDP portal for single collateralization day in order to learn as much as we can. Let me slow myself down too. I know I'll be speaking real fast. I gotta start practicing on keeping my feed at a very kind of general level so everyone can follow along. They want to learn as much as we can from our users and use that knowledge to release an improved version of the CDP portal for multi-collateral DAI. If you have any thoughts, feedback, questions, or concerns, please let us know via your product feedback channel. I'm going to be giving a real good example of why one will want to utilize this platform, a real world use. Not so much of a trader's use, but like a real world use of anyone that may have been invested in cryptocurrencies, but is pretty much a regular like a regular Joe Smo, goes to work 9 to 5, you know what I mean? They just so happen to invest in cryptocurrency on the side, meaning they may have invested years ago when it was low and they're still hodling or holding those cryptocurrencies. They may be cost averaging or entering positions as they get paid from their job. So every week or every 2 weeks, every month, they take a certain percentage out of their take home and they invest that in the cryptocurrency. And they may not want to liquidate that cryptocurrency that they have, but they may be in certain positions sometimes where they are not financially capable of taking care of certain responsibilities, and they may need a little help. And instead of them having to go out and get help from an outside entity, an outside person, or even a bank, without you having to depend on somebody, for those that do have the assets, much like you do when you go to do a collateral loan from a bank, you got the vehicle. You're giving the vehicle to the bank and allowing them to give you money. What if you were able to take the title to your vehicle, the deed to your house, and loan yourself money from those assets and pay the money back on your own accord? What if you were able to do that? This is the white paper from Maker. I did want to sort of go through this just so it more so digs into this whole thing of DAI. And I want to go through this before I really get into the use case of it and what this means for us and everyone interested. Let me make sure everything's still recording. Let me make sure everything's still recording. Okay, everything's still clear. Also, family, for those watching, is everything still clear? Am I still clear? Am I choppy at all? Are you able to hear me? Is the screen clear? Let me know before I proceed. And I want to thank everyone that's tuning in with me right now. I want to thank everyone that's tuning in with me right now. Let me see. And those that are going to be tuning in later on, listening in on the New Money Matrix podcast. Let me see, waiting for some type of confirmation, any type of confirmation that I'm able to be heard and the screen is still clear. Like I said, I do know there is hold on. I do know that there is a lag. So, okay, still clear. Thank you. In fact, you know what? Before I even get into this whole complicated thing, right? Let's do this like this. Why would I want to collateralize my Ethereum? Why not just use my Ethereum? Those questions should be looked at from someone operating in a public capacity and a private capacity. When we look at the wealthy, when we look at how banks operate, right? These individuals, these corporations, these institutes do not use their own money. When we look at endowments, in fact, we were talking about endowments earlier, right? What is an endowment in the investment world? Definition of an endowment is a fund, right? An endowment fund is an investment fund established by a foundation, which is a trust, that makes consistent withdrawals from invested capital. The capital that's in endowment funds, often used by universities, nonprofit organizations, churches, and hospitals, is generally utilized for specific funds or to further a company's operating process. So the endowment uses money that other individuals put in there. That's it. That's all. Same thing a bank does. A bank does not run on its own money. A bank can only run on the money that's put into it by you, the debtor, the consumer. You know what I mean? The trustee of the trust. Operating in your public capacity, though. So, what would be the advantage of me being able to utilize this on my own? Well, much like the last one, just like the last one, let's say that I want to place a long position on Ethereum, or any other token, because you don't even have to do Ethereum. You could put a long. Let's say all I have is Ethereum. Let's say I want to bet on, let's say NPXS. Let's say I'm expecting NPXS to have a jump, but I don't want to sell my Ethereum to do it. I could lock up my Ethereum in a loan, pull out X amount of funds, and invest those funds in another token, right? Trade, get my profit, pay back what I loaned, and keep the extras, right? That's from a trader's aspect. Let's use this in a real world use of somebody that's not a trader. Like I said, a regular Joe Smo. Let's say I'm behind on my bills, behind on my rent. I invest in cryptocurrency on the regular, so I do have a nice amount of cryptocurrency available. In fact, I have more than enough to actually take care of my rent and the bills. But I don't want to sell my cryptocurrency, right? I'm at a dilemma here. They have now opened up a way to get you out of that dilemma. Remember, they're making remedies. They're making remedies right here. We got to pay attention to what they're doing. So I would put my assets, or in this case being Ethereum, into a loan. I would then loan myself the money that I need to take care of the bills, the rent, even if I need things around the house, right? But I know that, man, I get paid in another week or two, and I'll be able to pay that loan off, and still have my assets that I had. I didn't sell anything. I didn't get rid of anything, family. I didn't sell the gold. I didn't sell the Ethereum. It's locked up in a loan, my loan that I had to pay back myself to me. So I take out that money. I utilize it for whatever it has to be utilized for. Now, peep this though. Let's say the price of Ethereum, as it has done with me, let's say the price of Ethereum increases in value. Let's say the time you put it in here is $145 a coin. Let's say that goes up to $200 a coin. With that extra Ethereum in there now, or not an extra Ethereum, excuse me, I apologize. With the added appreciation, the value of that Ethereum token, right? I can now pay the loan off with the value that I have in there. And it also lowers my liquidity price. The higher the value of Ethereum goes after your initial CDP, the lower your liquidation price goes and your ratio. So definitely keep that in mind. So like I said, I will be able to take care of whatever responsibility I have, pay off my loan as a private and sovereign individual, human being, and then take out my asset. Now, how can this also be good for not avoidance, but yes, the avoidance of capital gains, right? Peep the game now. Peep this out, family. Let's say you were to use Coinbase and you purchased Ethereum through Coinbase. Technically speaking, if you were to sell that Ethereum, you would owe taxes. Remember, I'm not a tax advisor, family. I'm just speaking in the sense of what they say out here, okay? you would have to pay taxes on the capital gain based off that what you made off that Ethereum, right? Right. Now, let's say that I want to, let me see how I'm trying to put it. Hold on, let me see. I want to make sure I put this right. Hold on. Damn, I lost my train of thought that quick. What was I alluding to, family? What was I just going over? I lost my train of thought trying to come up with a way to put it. What was I just going over? Brother Marcus, can you help me out? Miss Jaslyn. Especially they letting you to choose other tokens. That's the love of the whole. Yeah, definitely. What was I just going over though? I forgot what I was about to try to explain to y'all. I don't know how that happened. If somebody can help me, remember real quick. Anybody? I don't know how. Like my brain just like gone. So somebody can help me. What I was about to explain to the family. Oh, there we go. Loan to self and taxes. Thank you, Miss Jasmine. All right. So check it out. You use Coinbase to buy Ethereum. If you sell that Ethereum, you may. Okay, I'm not gonna say what you may. In theory, you would owe capital gain taxes on that. But if you buy that Ethereum and place that Ethereum in a loan, and out of that loan you extract extra funds in order for you to do this, that, and the third, you never sold your Ethereum, family. You don't owe anything on that Ethereum that you bought because you didn't sell it. But you're still able to utilize the funds as if you sold it. We get this? We hear what we're able to do here with this self-banking, sovereign banking, should be right in accordance with in-home banking by Brother Derek Gracie. In fact, if anybody watching this will watch this, if you can't put me in tune with that, brother, I would like to introduce this to him. Hey, yeah, hey, Red Jazz Flow. I'm talking about Miss Berry, right? I'm talking about, man, this is phenomenal, the advancements that we're being given right now within this new banking system, this new monetary system, this decentralized financial system. The possibilities are endless. What is a collateralized debt position? Let me explain this a little more for individuals. Now, for anyone that ever seen The Big Short, right? Anyone that does any type of research on the Fed, financial instruments, fiat currency, decentralized currency, digital currency, we know that right now what they're doing within this space is rewriting history as we know it. They're remaking, revamping, and amending the monetary, economic, financial, and banking system. New instruments are being created. So where does collateralized debt position come from? Well, it comes from a CDO. In my opinion, that's where they got the idea of it from. What is a CDO? A CDO is a collateralized debt obligation. Hold on, what is this now? So we got collateralized debt positions, right? Which previous to cryptocurrency, there was no such thing. No such thing whatsoever. Previous to that, all you had was collateralized debt obligations. Now, what is this? A CDO is a structured financial product that pulls together cash flow generating assets, right? And repackages this asset into discrete tranches. Pay attention to the word discrete. That means kind of hidden. We don't want everybody to know. What is a tranche? Well, tranches are pieces of debt or securities designed to divide risk or group characteristics in order to be marketable to different investors. Each position, so a tranche is a position, or a tranche is one of several related securities offered at the same time, but with varying risk, rewards, and maturities to appeal to a diverse range of investors. Right? So these are they pull together cash generating assets and repackage the asset pool into the discrete position that can be sold to investors. A collateralized debt obligation is named for the pooled assets,
such as mortgages, bonds, and what? Loans. They are essentially debt obligations, right? That serve as collateral for the CDO. So if you get a loan from a bank, they sell that loan. They sell the loan, family, because they know the majority of Americans are going to defraud. No, that's not the word. Renege on a loan, and that's what they betting on. I don't know if y'all knew this, but corporations and companies actually make more money. Those that give out money, those that lend, those that credit, they make more money off people that are not able to pay back those loans or that credit than they do off individuals that are. I hope y'all know that. Let me see. So once again, a collateralized debt obligation is named for the pooled assets, such as mortgages, bonds, and loans that are essentially debt obligations that serve as collateral for the CDO. The positions in the CDO vary substantially in their risk profiles. The senior positions are generally, once again, you see, once you understand the definition of a word, how you're able to reuse it and use that the term that's more convenient for you to use and still has the same definition versus you using the senior tranches. No, I'd rather use positions. The senior positions are generally safer because they have first priority on payback from the collateral in the event of default. That's what I was looking for, default. People to default on their loan or their credit. As a result, the senior positions of a CDO generally have a higher credit rating and offer lower coupon rates than the junior positions, which offer higher coupon rates to compensate for their higher default risk. That is a CDO, not to be confused with CDP. CDP is its own thing. Now, what is a collateralized debt position or CDP? Collateralized debt position is a financial cryptocurrency concept, not anymore a concept, which has been developed since 2014. Wow, with the whole ecosystem of MakerDAO project. So they created their own thing. Basically, the main purpose of a MakerDAO is to minimize the price volatility on cryptocurrency markers through own MakerDAO stablecoin DAY against the fiat currency. Thanks to this progress, it is now possible to create new functionalities like a traditional financial world, but with the difference that everything is decentralized by blockchain technology and smart. New money maker. Welcome. The usage. Collateralized debt positions allows that you the CDP allows that you can lock up your crypto assets. Right now it's only ETH into a CDP vault, and you will get a loan in the amount of 66% of the day, which is $1 against the deposited amount. If you want to get back access to your locked crypto, you will just simply repay your borrowed debt in day. Real easy. Use case example. You lock up 10 ETH into a CDP vault. In the time of lockup, the price of ETH is 400 USD. So you locked up the equivalent $4,000 in USD. Now you borrow up to 6 ETH worth a day, which is $2,420, right? No, which is 2,460 day. Which is the equivalent to 2,640 USD. You repaid to borrow 2,640 day at any time in the future and get your deposited back in ETH. The ideal situation would be if the price of ETH will be higher, for example, 900 USD, you would pay 2,640 day to repay your debt, but you get back 10 ETH, which is worth now $9,000. See that, family? You didn't have to get rid of your asset. Your asset appreciated actually while you had a loan out. You were able to keep whatever you made off of that extra, pay back your initial loan, and that asset that you put in there has appreciated to the point where you're pulling out profit more than you put in there. And you only got to pay back that initial loan. Remember, your loan price does not rise with the value of Ethereum, family. All this is the magic of the CDP. You can spend money now and still hold your crypto asset. Family, are we getting this? Are we understanding what this is allowing us to do? Are we fully, truly comprehending the advantages that this is allowing individuals to take advantage of? Let me see. Did we go over everything already? Let me see. I don't think so. Okay, let's see. Exactly. I only pay taxes. Hold on. Let me see what type of comments we got. We got comments coming through. Okay, especially they letting you to choose. Okay, loan to self, taxes. I like that. Exactly. I only pay taxes on what I would want to be taxed. Right. Well, you keep the ETH with Coinbase. Then, like you said, that is a back door. Yep. Definitely a backdoor. Exactly, and appeal to investors. Exactly why we had this talk today with my man, especially check cashing is like it's 300%. Now, real quick, right? Real quick. Well, I want to go through all this. Creating the CDP and depositing collateral, paying the debt and stability fee, withdrawing the collateral and closing the CDP, single collateral day versus multi-collateral, pooled Ethereum, price stability mechanisms. I think I've done a, for those that are watching right now, before I run through and read all of this, have I done a pretty good job at explaining what these two platforms are, as well as the functionality and the utilization of them? Because if I have, I don't have to read all of this mumbo jumbo right here. If I'm breaking it down in a way where everyone can comprehend it, we can just move along. So let me know if y'all, if that's how I like. I want to move on. I want to show y'all the type of loans that are being taken out on there. That's how I like the graphic shows it, how it stays stable during up and down trends. Yeah. Wait, I'm about to show y'all something. I'm about to show y'all something real. It's gonna blow y'all mind. But let me know if I broke this down to the point where, especially you, Miss Jaslyn, with you being so new into the space, was was I able to articulate this in a way that you were able to comprehend it for someone just now coming into the space? If you're still watching, I don't know if she's still with us or not. I don't know if she's still with us or not. But if you're still watching, did I break this down in a way that it allows you not so much to go place a loan, but have sort of a simple, okay, she said yes. Okay, thank you. Okay. It's example how your ETH stays stable and you get your, no, the ETH doesn't stay. Okay, yeah, it does. The amount of ETH stays stable. The value of it, though, can fluctuate, especially if you want it to go to the upside. So, come on. I'm waiting on ETH. Let's see what's going on with EOS. EOS back down to 84 cents. Okay, so yeah. I'm just waiting for a dip on ETH and Ethereum. Not a big dip, just a small dip real quick. All right, so now what we're gonna move along to, right? I've showed you all this, how you'll utilize it. Gotta open these up to unlock these. Let's see, global CDP information. Here we go. Look at this. So, global CPD collateralization right now is 368%. Maximal global day available, 81,943,755. Let's see all the CPDs real quick. All right, so 1 minute ago, somebody put in 825 Ethereum. Let's do the math. How much is 825? 825 gives us $122,395, right? And they were able to pull off of that 46,504 day, right? So they put in, once again, 122,000. Off that 122,000, they were able to pull off 46,000, which isn't even half, not even half. And their liquidation price is $81.18. That's wow. So Ethereum would have to drop down to $81.18 in order for them to get liquidated. Let me see. Let me show you one even better. Let's look at MakerScan. This is the MakerDAO Explorer. Let me see. What was that? That was 196, I think it was. So now what we're looking at right now, this gives us more so of a view, right? This is the CDP creation over the last 12 months. January, they had a very, very good month. I don't know what the hell happened in January. It may have been what's going on out here in these markets, trade wars, tariff wars, even on the brink of war. But January had a very, very high month. So right now we're looking at this. The collateral ratio is only 27%. That's low. So the total ETH that they have in asset holding right now is 2,072,207. Let's see how much money they got in here. What's that? 2,072,000. And what was it? Let's see. We can start closing a lot of this. We got too many things open. Start closing some of these windows. There we go. Also, family, if anyone is tuning in right now, for those that wish to donate, I'll be happy to get on that. Those that wish to donate, those that want to donate, you can hit the Cash App at Alamarak. That's $ALAMIRAK. Once again, $ALAMIRAK. For anyone who wants to donate, for this monumental, this life changing information that I'm bringing, and it truly is life changing. Truly is life changing. So right now, what's that? 207, 20. Wait, what? That was weird. Hold on. 2072, 20704. Okay. 2072, 20704. So right now we got a total of hey, look, I'm gonna tell y'all something. Over the last couple of days, because I've been going over reviewing this with individuals, we had a total of over $250 million in there. Only $250 million being 250 million bucks, right? Now, not even 2-3 days later, not even two. Man, we were just looking at this yesterday. We got a total of $307 million worth of Ethereum in here. I'm gonna say that again. It's over $307 million worth of Ethereum in this one platform. How was that for a startup company as far as investors? So this is how much people have placed in here willingly, family, on their own. They put in over 300 million bucks on their own. Now, out of that 300 million, how much have individuals pulled out? Well, we can look at it in DAI. In fact, let's do this. Let's pull up DAI also. Let's do this. Bring up a whole nother one. So with DAI, we got over 81. Okay, they're telling you right now, it's 81. How about say 81,000? So they got over $250 million in collateral. And right now in loans, they got only $81,933,505. Family, it's 81 million loaned out of this platform, this decentralized bitty thing that's on this internet, open for any and everybody to use. Something that's gone on under the radar. You don't hear CNBC talking about this shit. You definitely don't see this on C-SPAN. They got over $250 million in collateral assets and over 81 million out in loans, family. And they're nowhere near liquidation price. Can't say the same about the United States or surrounding countries and jurisdictions. Now let's bring up DAI on here. Okay, so yeah, it's only 15. But you know what? That adds up. That 15 cent adds up. So let's see. 81,933,505. Let's see how much it is. This is exactly how much we're playing with. 81,933,505. So we got 81,993,505. Was that 993 or 933? 933, excuse me. I don't want to throw us off. 933. 505 and 39 cents. So now we jumped, right? Remember, it was only an extra 15 cents, but I'm gonna tell you how them twos and twos add up. So now we went from 81,933,505 DAI to the equivalent of $82,596,970. So that little 15 cent added up to a whole another $1 million, if not a little under $1 million, family. Just those tiny pennies. Now, what are we looking at here? They're in danger of being liquidated. More than 50%. They're in danger of being liquidated right here. They just placed this a minute ago. They placed in, let me see, they put 64 Ethereum in here, right? They put 64 Ethereum, so let's see. They put $9,494 in here, and they pulled out 4,764 equivalent. That was just a minute ago. Let's see. Let's find some big head honchos. In fact, we can go to our high debt CDPs, high collateral CDPs, risky CDPs. I'm saying this is a whole financial world, family, right here under our noses. Like, I guarantee you can sit me down with one of your bankers. I guarantee you can sit me down with your financial advisor. I guarantee you can sit me down with a lawyer in the financial world who deals with bankruptcies, and I bet you, I almost guarantee I could talk circles around his head about CDPs and high collateral loans, low interest rates within this cryptocurrency space. I can almost guarantee my level of understanding and my level of research within this market is that much more of somebody that's probably spent the last 10 years within the financial. I'm not saying that in finances, but within this new money matrix, oh, best believe that what I know definitely knocks other people out of the water. Let's see what we're looking at. Okay, they just locked in, right? This is how you want to look at this. This is how you want to look at this. Let's see. Let's find one. Let's look at some high debt. Nah. Yeah, let's look at some high debt CDPs. Let's see what we got right here. Okay, so this is a CDP started 2 months ago, right? You can look at the whole lifeline, what they've been doing. They've been pulling in, paying off, taking out, pulling in, paying off, taking out, pulling in 4 weeks ago, 3 weeks ago. But they didn't. It's been about 3 weeks. It's been about 3 weeks so far since they did anything. Let's see. Let's open this up. Then they got 185 more. Wow. Whoever this is has been working the hell out of they wow, they've been working the hell out of this. Look at the amount of money they have in their family and the amount of money they're pulling out. So let's just real quick, right? Let's just real quick. Now you are able to track certain CDPs on here also if you want to know exactly what they're doing and how they work. So right now, all right. Right now, he has over 203,553 Ethereum locked up. This is an individual. Now I don't know if this is a corporation. I don't know if this is a company. I don't know if this is one person. All we have is a number to go off. But this one person right now, they have over 203,553 Ethereum locked up into this account. So 203,553 was it? 553.32. All right, so they got a holy shit. And I know this may be unbelievable for some individuals, like, yeah, right. But that one individual, person, corporation, trust, estate, whatever it is, has over 30,198,562 dollars in loans. Remember, family, this is right under the radar of any type of regulation, sanction. No, nobody. Get the possible, but person has $30 million in collateral in an internet right? An internet program. This isn't a bank. This isn't your financial advisor. This isn't some trust company that you have entrusted with your millions and your life savings. This is a fucking excuse my language. This is a computer program. A computer program that hasn't been up and running longer than 2 years. Barely just hit a year. And you got an individual that trusts this program enough to throw $30 million worth of assets in. Hold on. What did they pull out? Right now, they're looking at 8, and we're not going to go around it or anything. But right now, they got an equivalent of $8.6 million in debt pulled out. You know what they can do with this? Now, I'm going to keep that thought to myself. This, I mean, family, are we getting this? What's going on here? Are we getting? Let's go and see some more, because this right here, they've been doing this for 2 months. Let's see who's new to the game. Let's see if we can find some head honchos like that who's new to the game. Let's see. I'm scrolling through for those that be listening in. I'm scrolling through right now, looking for other loans, high loans. Let me see. I just see one for 11,000. Let me see. I might go back up and look at that one if in this next list we don't see anything that stands out too much. Okay, so now, so let's go back. Let's look at our previous. Where was it? Holy, what is this? Somebody just. Okay. Peep the move. Peep the move right here. Here goes one right here for us, family. They got 1,000 out. They got 11,000 out. They got 12. Okay, we're gonna run with this one. So about an hour ago, right? Just about an hour ago, somebody locked in 12,259 Ethereum. 12,259 Ethereum. Let's see how much they put in. 12,000. What was that? 259. Yep. 12,259. They put a total just an hour ago. Somebody came and put 1.8 million in here, and out of that 1.8 million, they pulled out $870,000. Hey, I'm at a loss for words. I'm really at a loss for words here. I got you fully until everything. I'm for surely going to use this platform. You leveraging for the loan approach. Keeping your ETH safe and stable while you trade, taking a loan if I'm correct. Everything merged well. Okay, I just want a piece. my man. So I mean, it's 11:11 right now. You already know angelic numbers. I think I did a pretty good explanation, family, showing us how we can bank the unbanked. And once again, same example as earlier. Let's say you got to pay your car note or something, right? And remember, this is for individuals that are in the cryptocurrency space. If somebody that's not in this space, this shit probably makes no sense and really doesn't matter. But someone that is in this space, that has come to the realization of how important this space is and the capabilities and comfortability of it, number one. I mean, when I see somebody else throwing 1.8 million in something, I'm not too scared to throw $1,000 in there, 5,000, hell, 10,000. You know what I mean? I'll follow the money, family. And the thing of it is, we don't know who the hell these individuals are. We don't. I mean, for all you know, this could be the New York Yankees or whatever. I mean, I don't know the name of the team. I know a lot of. It could be the Chicago. This could be the owner of the Chicago Bulls doing it. I mean, you don't know. This could be Michael Jordan. This could be Steph Curry. You don't know who's doing this, family. That's the beauty of it. That is the beauty of it. So, I guess I'll follow this up with a live Q&A. Do we have any questions from the family? Do we got any questions? We've been going on live now about an hour. Man, no. We started at 9. We've been going live now about 2 hours. We've been going live now. No, I started at 9:15. So yeah, we've been going live now about almost 2 hours, family. In fact, no, we are 2 hours live. So do we got any questions? Any comments? Once again, for those that do wish to donate, in fact, I just posted in there. That way we ain't got to keep going over that. So, any questions, any comments? If not, I'm going to go ahead and end this and post it. Of course, you'll be able to view this once again on YouTube for those that need to come back and look at it. Also, you'll be able to listen in on the New Money Matrix podcast. I have to watch it from the beginning, but I definitely learned something new. Thank you. I'm glad you learned something new, Queen. I'm glad you learned something new. And definitely it's a video I did before this you may want to check out too, where I did more so of a review of the Maker coin and what they have going on. So check that one out. I think it's like 30, maybe 40 minutes. And then no, my son ain't got Facebook. Well, no, you know, I think he does have Facebook, but he don't really use it. If you want to follow him on YouTube though, which he doesn't utilize it anymore, it's an old YouTube channel, but you can see what he was doing in the world of cryptocurrency. He does have his own YouTube channel. So if we go and we look up Crypto Kid, you can see we got the Chicago Crypto. Damn, we got 103 subscribers now. The Chicago Crypto Kid. Hello, my name is Amir, and I'm an 11-year young cryptocurrency investor. Follow me on my journey to financial freedom. And this is my son. Go to videos. These are the videos he has, family. Anybody can come over here and look. Not a lot. Like I said, I mean, he's an 11-year-old kid. You know, he didn't want to stay doing this shit. It was cool for him to learn, but you know, he wanted to go play with his friends and whatnot. But me being able to, and each one of these videos, he's doing this completely on his own. I'm not helping him do anything. Now, some may look at the platform he's using, which is BitConnect, which was outlawed from first Texas, and I think Ohio follows suit, if I'm not mistaken, and they ended up closing the platform down. But that is not in any way, shape, or form take away from the advancement that my son did with this platform. He made it up to $1,000 active investment. I suggest going to watch some of these videos, see exactly how he did what he was doing, and how he himself, much like myself, is able to articulate himself. Like my son's got a very, very high vocabulary. Even though he don't like to use it a lot, he can articulate himself very well. So yeah, this is his YouTube. I forgot his Facebook page. Like I said, he really don't use it. I'll get it and send it to you though, Queen. Let me see. Do we got any other questions? Any other comments? Okay. If they offering that, let me see. Not really, but I will hit you up in your email for the little help how to get my funds into the wallet on Binance or anything other platform. Yeah, I do offer one-on-one consultations. Definitely reach out to me. I do offer one-on-one consultations. Like I said, if anybody's interested in the book, with the book comes a free 30-minute consultation. So, you know, definitely utilize that. Definitely the book is a must-have for anyone just coming into this space. Nah, Queen, you ain't gotta say you're bad. Nah, you're all good. San Francisco, California is so expensive and hard to live. I need any help I can get. Just before we make a lot, the cost of living is so high. Your daughter watched it? Okay, good, good. I did screenshot his YouTube, no doubt. Yes, I want the book. Okay, if you want the book, brother, reach out to me on the email. I can get it sent to you. I'll send you my packages too, what I have available. If anyone interested in the book, once again, you can contact me at cryptonomicconsul@gmail, CRYPTONOMICCONSUL@gmail.com. I'm posting that right now. Cryptonomicconsul@gmail.com. Reach out to me. Yes, crypto is leading the race, and you're at the beginning of it. Keep studying and educating yourself. So many options in this space. Definitely. Yusuf, I'm in San Francisco as well. Okay, we got 2 individuals in San Francisco. 2 crypto enthusiasts in San Francisco. May want to link up in some way, shape, or form. Okay, no doubt, no doubt, no doubt. So, family, with that being said, if there's no other questions, no other comments, I want to thank everyone that tuned in with me. I want to thank all the individuals that tuned in with me and was able to get this information, was able to, and not even just get this information, they were able to withstand the information that I shared. It was able to comprehend, even just the smallest bit. It lets me know that you are set apart from the rest of society. Anyone that's utilizing these systems, I'm gonna let you know right now, you are damn near, I say 10 years ahead of society. I'm gonna say 5 to 10 years ahead of the rest of society right now, family. So keep that in mind. So yeah, with that being said, there's no other questions, no other comments. I'm gonna end this here. I want to thank everyone that tuned in with me for this show, Sovereign Minded Aspects of the Blockchain, Banking the Unbanked. I hope that it was helpful. And for those that are here to come, I hope that it's helpful. Until the next video, until the next podcast, this is Amir the Chicago Crypto Hustler, Bitcoin Block Bully. Peace, power, and prosperity, family. I am out of here.